Gold just ended 2025 near record levels after an unprecedented annual rally, and traders are asking what's next for our portfolio. Right now, spot gold trades near $4,318 an ounce, with a modest pullback from last week's highs, down slightly on the 24-hour session. According to real-time market data, trading volumes remain elevated and open interest shows continued institutional engagement. Top catalyst in the last 24 hours, global precious metals markets are cooling from holiday liquidity, while gold remains on track for its best performance in decades. Now we will break down the exact events driving gold's momentum, then move into key price levels you must watch into January. Record annual gains and portfolio shifts. Gold's 2025 gain is roughly 65 to 66%, its largest since 1979, propelled by central bank buying, commodity inflows, and macro uncertainty. Why it matters? Big gains shift investor behavior, attracting institutional hedges and rebalancing from risk assets into safe havens across the US, Europe, and Asia. Changing consumer demand in major markets. In India, traditional jewelry demand is falling as investors prefer bullion bars, coins, and ETFs amid high prices. Why it matters? India is one of the world's largest gold demand centers. A structural shift toward investment-grade demand signals longer-term flows out of consumer discretionary purchases. Mixed global sentiment and profit-taking. Indian MCX gold futures showed notable price slip today after holiday thin liquidity and profit-taking. Why it matters? Near-term volatility can trigger short-term trades and stop runs across Canada, Australia, and Europe before macro data resumes. Chart analysis and technical levels. Today, we focus on three key technical levels you must know in January. Major support near $4,250. This level has held multiple tests in recent sessions and offers a floor if profit selling accelerates. Breach below $4,250 would signal short-term downside risk into $4,150. Immediate resistance near $4,400. This zone capped rallies in the past week. A clear break above $4,400 with volume would open the path to retest recent highs above $4,500. Trend confirmation above $4,500. While not current, holding above $4,500 into early January would reinforce longer-term bullish structure and shift investor sentiment into accumulation. RSI on daily charts retreated from overbought conditions after the big 2025 run, suggesting consolidation rather than exhaustion. Momentum changes at these levels often signal when big capital rotates in and out. Now, let's connect these price levels with real economic drivers. Fundamental drivers and news impact. Driver 1, Federal Reserve Policy Outlook. Minutes from the Fed's December meeting show the central bank remains focused on inflation management while acknowledging the near rate cut. Effect on gold? Expectations of lower real yields support bullion since gold carries no coupon and benefits when opportunity cost of holding it falls. Driver 2, US dollar and bond yields. Persistent macro uncertainty has kept the US dollar soft into year-end, lifting gold's appeal globally through exchange rate effects, particularly across UK and Eurozone markets. Driver 3, geopolitical tensions and reserve buying. Central bank demand from Asia and Europe added structural support throughout 2025. This reserve buying offsets profit selling and sustains net demand. Softer yields and central bank flows make a sustained break above resistance more likely, while disappointing data points could trigger retests of support. Directional bias for the next 24 to 48 hours, neutral to bullish range, with emphasis on support holding. Price targets? Near-term support $4,250 as first line of defense. Upside trigger, $4,400 breakout. Bull confirmation, reclaiming $4,500. Events to watch in the next 24 to 48 hours that may move gold: early 2026 macro surveys, US dollar PMI data, and Asian session liquidity. Tomorrow, we will dive deeper into how January's macro calendar may define gold's trend for the first quarter of 2026.